Want to start investing but lack thousands of dollars? You are not alone in this. That is most likely why you have not yet begun investing, or at the very least have not diversified your portfolio. Fortunately, there are numerous ways to begin small and gradually expand your investment portfolio. $1,000 may not seem like much, but it is your hard-earned savings. Don't underestimate the power of your money. Even $1,000 is an excellent start toward long-term financial flexibility. There are several investment opportunities available in today's world. While having so many options is great, choosing which path to take can be daunting. To get you started, here are 8 investment options. But before we begin, please remember to like the video and subscribe to the channel for more similar content. 1. Open a savings account. With the best annual interest rates below 1%, saving money in a savings account can appear to be a poor investment. However, millions of households lack sufficient emergency funds. If you find yourself in that situation, this is an excellent place to begin. Here are several reasons why investing in a simple savings account is a wise move. Rainy days are an inescapable fact of life. While predicting life's twists and turns and when they will occur is unlikely, having some cash on hand will always help cushion the blow. And if it prevents you from borrowing money at a high interest rate, such as on a credit card, the small savings account return is well worth it. Maintain a cash reserve of at least 3 to 6 months' worth of expenses. 2. Open a retirement account. It is never too early to begin retirement planning. The most effective way to do so is to invest in a retirement account. You may have a retirement plan funded by your employer, such as a 401k. Contributions to this account should be made annually, and more so if your employer matches your personal 401k contributions. Up to 50% of Americans lack access to employer-sponsored retirement accounts. If you fit into that category, you should consider opening an individual retirement account. Among the various IRA accounts available, a Roth IRA remains the best option for millennials looking to invest money. If you invest $1,000 in your Roth IRA to begin, it's difficult to predict how much money you'll accumulate over a year. It is contingent upon the type of investments you choose for your account and market conditions. Consult a financial planner if you need assistance selecting investments. An average annual return on a Roth IRA is between 7% and 10%. Contribute to your Roth IRA each year, and you will reap the rewards over time. 3. Invest with a Robo Advisor. Although a Robo Advisor may sound like something out of science fiction, they are fairly common these days. A Robo Advisor is a low-cost substitute for a financial advisor. It can be beneficial if you're a new investor who feels frustrated by the thousands of investment options available. These AI-powered advisors will ask you a few simple questions to ascertain your investment objectives and risk tolerance before recommending a low-cost investment portfolio. They are constantly revising the portfolio based on their algorithms. With $1,000, you can invest directly in a robo-advisor like Wealthfront or Betterment, which will provide you with a few ETFs and a plethora of diverse stock market exposure. The majority of robo-advisors demand a $500 minimum deposit, which you would have already surpassed. 4. Invest in stocks. Try buying individual stocks if you want more leverage over your finances and which companies you own. Even with a budget of $1,000, it is possible to create a well-diversified portfolio of entry-level stocks. Numerous brokerages also enable investors to buy fractional shares of high-priced stocks. Individual stocks are permissible in both IRAs and taxable brokerage accounts. Additionally, profits on individual securities are not taxed before they are sold, making this a tax-deferred strategy in a brokerage account. However, keep in mind that stocks represent a stake in a company. Few entrepreneurs embark on a new venture to remain in business for a brief period. Stock ownership works well in a similar fashion. Possessing a stake in a reputable company becomes increasingly powerful the longer one is involved. Thus, if you choose this route, it is critical to conduct due diligence and make a purchase with the intention of keeping the stock for at least a few years, if not forever. 5. Real estate crowdfunding. Numerous conventional real estate channels, including Equity Multiple, restrict access to qualified buyers with a 6-figure income and $1 million or greater net worth. Although Equity Multiple is selective on who they consider as investors, they do offer a variety of investment opportunities, including preferred equity and syndicated debt. Equity Multiple's historical returns have also been remarkable. Fortunately, crowdfunding has thrown open the doors of the real estate industry, making it accessible to even the most inexperienced investor. Individuals can pool their investments and connect with available real estate developers through crowdfunding real estate. With $1,000, you can invest in a variety of crowdfunded platforms, including Streetwise, Fundrise, and Realty Mogul. Streetwise operates similarly to a REIT, hence the name, and enables you to begin investing in real estate with as little as $1,000. It's important to note that this is not a crowdfunding platform, but rather an actual REIT that allows for multiple investment options. Fundrise enables you to invest in a variety of different portfolios depending on the size of your initial investment. These funds will be invested in a diverse range of commercial real estate ventures, each with a different level of risk. It's an excellent way to get your real estate career underway with just $1,000. Realty Mogul is an excellent choice for accredited investors, but it needs a minimum investment of $1,000. You may begin investing as a non-accredited investor in one of Realty Mogul's two EITs, both of which have immediate exposure to the real estate market. As is the case with other websites, you can open an IRA or invest in a taxable account. Bear in mind that real estate crowdfunding is not for those looking for a fast, simple cash grab. Investors advise investors to stay in it for the long term, at least 5 years, if they want to see significant returns. Since these investments cannot be sold easily, they are unsuitable for short-term investments. 6. Low-cost ETFs. Exchange-traded funds have made portfolio diversification a breeze. This is similar to a mutual fund in that you can invest in a variety of different stocks through a single ETF. How it works: ETFs allow you to buy a diversified portfolio of stocks and other securities in a single transaction. You can invest in ETFs through the majority of the major brokerage firms, and usually at a low investment cost or no fees. M1 Finance is one of the best choices for ETF purchases. This investing platform allows you to exchange over 13 different ETFs for free, which is an incredible deal. Any investor will benefit from investing in ETFs. It's also more advantageous for those with $1,000 to invest, as ETFs allow for greater diversification than individual stocks do. 7. Open a CD. Consider investing $1,000 as a novice investor in a certificate of deposit, commonly referred to as a CD. A certificate of deposit normally pays a higher rate of interest than a traditional savings account. You purchase the CD directly from the bank, and most CDs need only a $1,000 minimum deposit. The CD is valid for a specified period of time, between 28 days and 10 years. You cannot, however, withdraw your funds during this period unless you want to pay a penalty. Other than that, the bank pays you a fixed interest rate for the term of the CD, which varies by bank and deposit number. You may receive interest payments via check or have them automatically reinvested in the account, which is referred to as compound interest. 8. Buy Treasuries. It may appear to be a risky step to begin investing in U.S. savings bonds. However, security bonds are a relatively secure investment since they are backed by the government. You can buy these fixed income securities through the Treasury Direct portal. These bonds will last from 30 days to 30 years. By purchasing a savings bond, you are indirectly lending money to the government. When you redeem this loan, the government repays you the principal plus interest. Finally, whichever way you choose to invest $1,000, keep in mind that you are taking a critical first step. The fact that you've watched this far indicates that you're serious about making a wise investment. You're leagues ahead of the majority of people who put off investing until it's far too late.